Hello traders, welcome back to TJNE FX. We're going to have a weekly review of EURUSD and GBPUSD and study all the potential trades that the market has offered us. We have a weekly chart of the dollar, and as mentioned on the weekly forecast, we've been expecting that price to fill this weekly CB and to trace to premium of this range from this high to this low. And you see that price it is at optimal trade entry right now. Yeah, this is premium of this range, and we want to see price retrace to optimal trade entry to drop lower as a continuation. Okay, just give me a second. Hmm, nice. To drop lower, filling the weekly BC, taking the sell side liquidity below the low of the range, then the monthly BC here, right? And we have as invalidation point this high here, this swing high, this high is higher than this candle's high and this candle's high. So if price right now the IF is bearish, we have weekly bearish, could say. If we this 1 week is bearish, right? I'm expecting price to continue lower. This is the higher probability for me to check this weekly CBC, then to fill this monthly BC. This is the higher probability for me. But if price check this high here, what we're gonna have? We're gonna have an accumulation, manipulation, and we're gonna look for a distribution above this equal highs, above this buy side liquidity, filling this monthly CB right above. If price check this high, so I'm expecting the weekly to continue lower as the IF is still bearish, but if price take this high, this is the invalidation level of our IF, and we're gonna switch to being to bullishness for price to check this equal highs right here. This buy side liquidity we have these highs here are equal. We have this high as buy side liquidity to take to check all these buy stops here above this equal highs to fill in this monthly CB, right? Then we could say after price filling this monthly CB, is price gonna continue higher, making a higher high, or price gonna just retrace lower from premium of this range of this high to this low, price gonna retrace to premium to drop lower. Yeah, until then we're still expecting bearishness from the weekly time frame. And we see that price the previous week here, this candle here has closed bullish, making price on the daily time frame to making price to go higher to premium, to rally up to premium of this range here, as we said, right? Filling this weekly CB, and we still have, if price for this is for the next week, there is still chance if price gonna go higher filling this weekly order block, then drops lower, or maybe just gonna drop from this weekly CB, and we still have also a rejection block here that price could fill it, then drop lower. This is for the next week, right? So what happened this week? We see at the daily time frame what we have. This is Monday candle. We see at Monday candle price has went higher, filling this volume imbalance right here. This daily volume imbalance inside this weekly CB. We can rid of this weekly CB just to give to have a clean chart. Maybe we're gonna do something like this just for the weekly chart, right? Maybe something like this. Man, just for the weekly chart. We know that we are inside that weekly CB. We have our volume imbalance here that Monday has taken Friday's high, confirming that is really going to to premium of this range here. Let me add this just to keep showing you to premium of this range, and we see that price has reacted from equilibrium dropping lower. As Tuesday candle has closed as a bearish candle, as a contraction candle, right? We're gonna be expecting next week, next day, I want to say so. Next day, Wednesday and Tuesday to be bearish as well and do something like this. But I mentioned on my Telegram group that I said we should not forget that price has only reacted from equilibrium. It's still a chance for price to go higher to optimal trade entry to this breaker here, right here, to fill in this fair value gap right here on optimal trend entry on the daily time frame inside the weekly time frame, inside the weekly CB. Don't forget that. Then price could drop lower because price it just reacted from equilibrium here. So we had if price at that time during here, we had this daily BC as our target to take partial. We are targeting this level, but this level here, this daily BC, is a great area to take partial with this volume imbalance right here. If you see that price had just tapped into that premium imbalance, something like that, then it went higher. Yeah, so our invalidation point for this price action, it was Friday's high. So Wednesday high, this is Wednesday high. So if Wednesday high is taken, we're going to be expecting a continuation higher on the daily time frame to these areas here, to this breaker like I mentioned, to this fair value gap, to this fair value gap here, to the weekly order block also, and to optimal trade entry. As Wednesday high is broken, this is a confirmation that price is seeking deep premium prices. It doesn't mean that price has switched to bullishness. It just means that price is going to deep premium prices before dropping lower. And don't forget that I don't pick the high. So if I want to sell from premium prices, I want to see at least a 4 hour or 1 hour market structure shift. If we have that market structure shift lower, then I'm gonna be ready to sell. Until then, I could just be expecting bullishness to this fair value gaps here. Then if price take this high, as I said on the, we're gonna have a confirmation that we're gonna have an IMD pattern, an accumulation manipulation distribution. If price take this high. So on the 4 hour time frame, what we see that price, as I said here, this is daily BC. Where is it? Um, Visibility hours, minutes. What we have? This is a daily BC. Daily BC. Let's clean our chart. We have the daily volume imbalance at premium. So as price, and you see that Monday has been a consolidation. Then Tuesday has went higher, making at that time I have been expecting Tuesday high of the week, then Tuesday low of the week, but we see a Tuesday reversal. So then Friday has closed as a consolidation. This is the weekly template. So what we would be expecting at the time, I've been expecting this price take this low here as a break of market structure for our break of market structure. I have been expecting a drop lower and Tuesday to be the high of the week. This is this was my expectation during as information that I have during that time. So if we use a replay button and don't have this candle here, or maybe from here, what I have been expecting, I've been expecting Tuesday to be the high of the week. And this levels this fair value gap right here was an area for me to take partials. It's not a target, the final target for me. The final target was this equal lows, right? But this one was an area to check partials, and of course below also this low, Monday's low. If you see, this is Monday's low, so it was an intra-week low, and we had sell-side liquidity below it. So it was also an area to take to target. So we had this break of market structure. I've been expecting some kind of retracement, something like this. We have this fair value gap right now. The price has failed to the order block, the low of the order block. Then price continue lower from this order block also, filling the daily BC as we said, and price also retrace to a 1 hour fair value gap or something. Right here, yes, to a 1 hour fair value gap, then it drops lower. It is normal if you are been expecting something like this. Let me get rid of this candle, this big one. It is normal if you are expecting something like this price to feel this, to have some reaction from this daily BC to continue lower. That's normal, right? But you have to take partial, because this past week was a great lesson for all the traders that doesn't check partial. If you just entered here with an entry here, maybe you managed to find a stop loss above this high, and you've been targeting, at least you said, okay, this is my target, this equal lows. I know that draw liquidity is this weekly BC, so I entered a high of the weekly premium, so I'm targeting this level here. I'm gonna have 10R at least, or 9R. So if you have a refined entry, right? But then price has given you 3R, almost 4R, then it check you out like this. You didn't take a partial. A winning trade has become a losing trade right now, and there is no other thing more painful than a winning trade becomes a losing trade. You had money, say, okay, I'm doing good. You didn't take your money when the market has made it available for you, then price it took you out. So it was a great lesson for people who doesn't check partials, or who don't check partial. Okay, so this is what we have. We see that Tuesday has switched higher, and then I've been expecting, since price took this high, then some kind of break of market structure. I've been expecting Friday to do something like this, maybe a break to discount, then continue higher to our optimal trade entry as mentioned, or maybe price if check this low here, which is a confirmation now, which is a confirmation that price is bearish without retracing to optimal trade entry higher, or to feel that or to mitigate the daily breaker just to drop lower if it takes this low here. So this low will become our invalidation point, as we seen here. What we have weekly bearish, daily bearish. You see, the daily is bearish, but we have now for our bullish, as price took this high. Once price was here breaking this market structure, it was for our bearish, so you have your higher time frame in SIC to sell price. Now we have 4 hour bullish. If you What I do at this situation, this is for the next video. For the weekly forecast, I expect some kind of bullishness from 4 hour discount until we get to a higher time frame macro level for price to drop lower. And this macro level, we need to have a confirmation that price is shifting from that macro level. So if not, we're gonna just keep expecting higher prices. We don't pick the high. We don't try to say, okay, price it is at this level, now it should shift. No, we shouldn't do that. We just wait for a confirmation. If you do that, forcing a, you are forcing your idea to the market, saying, okay, I want this level to resist price. And what you are trying to do is you are trying to make the market to obey you, to 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 work for your interests, for your best interests. And we know that's impossible. And we know that's not the case, right? On the 1 hour time frame, what we see, as mentioned, we see this 4 hour BC. We have Monday as a consolidation day. Then Tuesday has taken Monday's high accumulation, this accumulation, right? High break of market structure, high here as an IMD voucher, break of market structure lower, then retracement to the 4 hour CB. Your entry here, you should enter here. Yes, we know at this day it was FOMC. Maybe you didn't enter because of FOMC. Maybe you have a big stop loss. So let's assume that I entered FOMC. If I entered, this is my stop loss right here, at least that high. It's not because, or at least above this high, with a little bit above it because of slippage. Or in news, high news event, there is a lot of news, a lot of slippage. So I'm gonna enter, maybe push my stop loss above this high. But if you see above this high, there is a buy side liquidity and equal highs. So maybe price could just take this high, take me out, then drop lower because of the news. We're gonna have this big volatility, so it is better to put your stop loss above this high. If you enter that FOMC, I don't enter at that time, so for me, I'm not gonna take this trade. But if you do, this was a good entry if it wasn't FOMC. The next day, Wednesday, price has given a good entry during London session. This one. So if you miss this trade, this is your entry here. You see that price has respected this fair value gap during Asia range, and we see Asia range has expanded lower. We have an expansion during Asia range, optimal trade entry, then the drop lower. This is for the dollar chart. This is a good entry for you, maybe somewhere here with stop loss here. Targeting, the first target is this low at the fair value gap. Then you can keep targeting lower, because we don't know if price is going to shift like this. We just don't know, but you have to take partial because you don't know. If Yeah, because the only certainty in the market is the market is uncertain. Is that the market is uncertain. The only certainty is the market uncertainty, right? So that's why you have to take partial here. You don't know if price is going to continue lower. Maybe price could just give you something like this. This is the target, give you 1 to 1. You didn't check partial. Let's you were targeting for this low, then it drops, then it shifts higher. It doesn't mean that the trade was wrong. It just the outcome was random. We know that the outcome is random, but on a trade by trade basis, we know that from a trade by trade perspective, we know all the outcomes are random. But from a series of trades perspective, we're gonna be profitable in the long run because we take our we take only the higher probability setups. Here, at this point, if you have this idea that price gonna respect this order block to option trade entry during New York to sell here, that's fine. It's not wrong if you have this idea. It's not wrong at all. The only thing that I can say that was a mistake. If you entered here, it was during the news, during the EURUSD interest rate announcement. So if you entered here, if there was no news, it is fine to enter. It is a good setup, even if it check you out like this. Even if you check you out, like I said, the outcomes are random. We enter our edge without any thinking, without any hesitation, because we know for sure many times this trade has been a winner. So if it check us out, we don't care at all. But the only mistake, if you enter at this trade here, right here, it was during the news. That's what I said. If you entered here, like I told you, it was a during the news. Maybe you won't enter. Maybe you could enter with a bigger stop loss as a swing trade, or maybe if you entered here, you can have a bigger stop loss, maybe above this high, above Asia range. So if price check, also if it checks London high, it's still maybe price could just respect this fair value gap, then drops lower. And if you check you out at Asia range, then maybe price it is indeed bullish. But like I told you, it is it is fine to enter here with stop loss here above the London's high, expecting to have a New York optimal trade entry, a New York continuation lower, retracement to premium, then drops lower. That's fine. But the only mistake it was during the news, during the interest rate announcement. So it's better to not enter because anything can happen with a big volatility, and you won't have time either to exit the trade or yeah, either to exit or something like that. So let's assume for another example, what if price has went to this point then drops lower? Yeah, price could do that to this order block to gonna almost taking you out, but then drops lower. You would see this on TradingView, but your broker is gonna check you out. Even if price doesn't check you out on TradingView, the broker gonna check you out because of that peak slippage during the time. And sometimes even you have your stop loss here because of slippage, the order gonna be triggered here, right? So you're gonna exit the trade here, so you're gonna lose more during the news. So even if the trade was from a technical analysis, it is a win. From a risk management analysis, it's gonna be a loss. So it's better to not even enter during the news. Yeah, because your edge can become you won't have an edge during the top. But if it wasn't during the news, it's better. It is a good entry for me, right? I would say I made that mistake. I entered at EURUSD. I wasn't trading all week because I wasn't available. Then at EURUSD, I made that mistake. It was an impulse entry. It was a psychology mistake. I entered fortunately with a low risk because I know there is I always respect my risk management even no matter what, even if I made a lot of mistakes, I respect my risk management rules. I entered with a low risk entry, but once price took me out, I said, oh yeah, from my respecting my trading plan, it was good. The only mistake I entered during the news, so it was wrong for me to enter at this point. So I journal it, I have it on my journal, so I will never make it again. I learned a lot of from this lesson. It was a psychological entry, a psychological mistake. I want to say it was a psychological mistake. It was an impulse entry. So yeah, then price has went higher. If you didn't check your partials here from this, if you enter here at this level here at London, you didn't check your partial here, that's your loss, buddy. You have to check always partial. And on 15-minute time frame, yeah, it's the same. We're gonna see our entry pattern. Say, okay, Asian range has been accumulating. We failed to check the equal height to make London high of the day. Then we have an expansion lower. Then price has consolidated prior to FOMC news during 7 p.m. New York time. Not 7 p.m. New York time, 7 p.m. my time. It was okay. Yeah, it was 7 p.m. New York time. Okay, my mistake. Right here. So okay, give me a second. 7 p.m. Ah, that's my time. So it was at 2:30 p.m. New York time. So we have accumulation, manipulation, then price has distribute lower. This was a good entry for me. If I entered, we have a breaker here. That price has retraced to it. Yeah, either you're gonna enter here, either you're gonna enter with your stop loss here above this high, targeting what? This low first, then the fair value gap. I exit for me. I exit at 122. I always close my trade at 122. Or maybe you're gonna go to the 5 minute time frame and look for your entry pattern. And what we see that price has taken this high here, break of mark. It took buy side liquidity above this high. We're gonna drop to 3 minute time frame. You see, and we see that price is drops lower, then it failed to check this high here. Once more again, drops lower, then it failed again to check the high. Maybe you're gonna miss your entry here. 2 minute time frame. If you drop to 2 minute time frame, it's based on your. This was a good entry. This is it. We see that price took this high, then drops lower to this order block, failed to make a higher high, then drops lower, taking this low here. We have our fair value gap entry here, and this was your entry. If you didn't want to enter from this fair value gap, put in your stop loss above this high. Either you're gonna enter here with stop loss here and exit at 122 if you are a scalper, or you're gonna target this equal lows here that we have. Check partial below this equal lows, then this low here to this fair value gap, or maybe you're gonna enter here the same entry, but you didn't want to enter this fair value gap at this breaker here at 15 minute breaker. Waited for a market structure shift to confirm your entry. You're gonna enter there with your stop loss here 122 like this. And so either if price check this high here, it's still a chance to drop lower because it's still inside this breaker, it's still a premium, and maybe price is just gonna check this equal highs for price to drop lower. So yeah, this is the interest from the dollar. I don't trade the dollar. I just showing you how to build a narrative from the dollar to check entries on EURUSD and GEO. So if we see the GEO time, the EURUSD, what we're gonna see the same from the weekly level. What we have price. We wanna see price retrace to this discount filling the weekly BC right here, and then price has mitigated or not seen not yet, but the open the weekly this order block open, but it did mitigate this high here, right? Maybe your weekly BC could be starting from here, and price is filling the weekly BC right here, respecting the bodies are respecting the fair value gap. On the daily time frame, what we see that price right now. Let's get rid of this level here because we know where price each is. Let's get rid of this and this. We see that price has dropped lower, like I told you, below equilibrium. This fair value gap, filling this fair value gap right here. If we get back to the weekly level, what we have, we're gonna have a mitigation block here, a weekly mitigation block also. So if you see the daily time frame, we see that price just mitigate the weekly mitigation block right here. and we see that the Monday has dropped lower from this daily fair value gap price here, has dropped lower. Maybe you could find some sell setup during Monday. Then at Tuesday we see that this price has closed as a bullish contraction candle. Even if it is, uh, it is a black candle as or maybe a red candle, it's still a bullish candle. It is a contraction bullish candle because it contracted, and how the price has closed, it is showing bullishness. Then we have a confirmation of that bullish contraction candle once price took Tuesday's high here. Yes, there's some traders who say, okay, we have this fair value gap, maybe price could drop from this fair value gap. That's, I could say, maybe that's good because you can find some sell entries here, but the IF is bullish. So if the IF is bullish, if we are reaction from a weekly level, we expect the daily level to fail, to you know to fail, you know, to hold price lower, or to drive price lower, or to drive it higher. That's what we're expecting. So if price it is reaction from a weekly level, we expect the daily level to fail, to drive price higher or lower. Here we've been expecting price, the daily level, to fail, price to drive it lower, right? And we see that price has continued higher during London. Do you see? Once price has opened, maybe we're gonna have some reaction lower to this daily order block. Then price has went higher, giving you how much pips? Let's assume from here it did give you 64 pips, right? To this daily BC. You check your partial. I don't say you close your trade here because the target is this high. You check your partial here, then price check you out. It's not gonna be a big deal if price check you out because you did check partial right here. So, and now what I'm expecting, we see that price has during Friday, price has went to the daily bearish order block and showed some reaction from it, and also it has filled this. It's still not yet, but we have this as equal lows right here. I mean by that we could see something like this next week. Price check this equal lows, filling this fair value gap, then a break of market structure higher. Yes, but until then, we still have this as our invalidation point. I mean by that, like I told you on the dollar, we could still be expecting bearishness from here for price to drop lower, right? To check sell side liquidity, then the invalidation point, we're gonna shift it to this candle here. So if price break that high, we're gonna have a confirmation that is gonna be bullish. Or price, if it doesn't break that the high, price is just gonna drop lower. Checking these lows here, then this low here, and if you check this low, then there's a higher chance to check this low, and if you check this low, there is a higher chance to check this equal lows or trendline phantom here, right? But the IF is still bullish. Don't forget that the IF is still bullish. This is only a retracement. The 4-hour time frame is bearish. And what we're gonna be expecting, the 4-hour to hold price to drop lower until this high is broken. Then I'm gonna say, okay, or maybe the next high is gonna be here. I'm gonna say, okay, price not right now has shifted higher, has displaced higher. So it is a confirmation for us to look for retracement to go higher once price do that. Until then, until then, I'm repeating myself. I'm gonna be expecting something like this. Yeah, following the structure. But we know for sure this IF, that this bearish IF, it's only for a short term bias. So Any break, any break, any high is broken. It's like it's a shift on marketplace. It's not a high. It's not a buy side liquidity taken for price to drop lower. No, it's any shift or any broke higher. It is a confirmation for us to to follow the weekly area. We see here on 4 hour. We see that price has closed above this candle's high here. During that time, we see that the daily time for the dollar here has break market structure here, this 4 hour low, confirming the bearishness, but the dollar it didn't, the EURUSD didn't break market structure high, even though it is a confirmation because the dollar is we build our idea, we frame our ideas based on the dollar, how the dollar it is is uh, is going. Then we're gonna look for a confirmation on our EURUSD, our pair to trade to to enter. So what we have, price has closed above this candle's high, confirming. Even if price close above the candle's high, it is a confirmation that price has shifted higher. If you use only the candles, the bodies, but if you waited for this high to be to be taken first, you're gonna miss your entry here, and you should just trust your dollar, the dollar, how the dollar is printing, and enter at this fair value gap here. So this is the weekly, the 4 hour CB, the 4 hour BC, right? An entry here to go higher. Check your partial at the daily CB. If you didn't take any partial right here, this is what happened to you. I'm gonna show you. I don't have it here. It's like the market maker has waited for you to be buying, then it check you out. So on 1 hour time frame, what we see that price is dropping lower. Like I told you, you could find, as if you see the weekly has started from here, from this candle, the weekly open. Right, from this candle here. This is the weekly open. Sunday opening price. Right? So what we have, we see that price has went higher above this accumulation during Monday, then drops lower, confirming that price is dropping lower to our level, to our weekly mitigation block here. This is the weekly mitigation block at discount of the weekly range, weekly mitigation block. So you could find an entry here at this fair value gap right here. See that price has failed this fair value gap right here during New York Hill zone. Maybe you have been waiting for an optimal trade entry, but if you see that price has reacted from equilibrium at Asian range low, where is Asian range low? Okay, this is Asian range low, but from previous daily high, this is previous daily low, Friday's low, and you can find an entry setup here at 15 minutes or 5 minutes for price to drop lower. And you see price it took this low, so we're gonna have another range. We're gonna have this high to this low. See price has reacted once again from equilibrium, taking Asian range high, making the high of the day during London, then price has dropped lower to, to equilibrium. So you can find an entry here, then a sell entry during London here, but once price filled the weekly mitigation block at equilibrium, we shouldn't, yes, price could just easily keep dropping lower if until this high is broken, then we're gonna say price is bullish. Yes, that's totally fine, but for me, I'm gonna be expecting bullishness because the weekly IF is bullish, the daily IF is bullish, and we are at discount level. I'm gonna be waiting for a market structure shift, even if price retraces to this, let's assume to this order block here. I'm not gonna sell. I'm gonna be waiting. I'm not gonna enter here waiting for confirmation, and I'm not gonna sell either. But once price has the next day price has closed like I told you as a weekly as the Tuesday has closed as a daily bullish contraction candle. I'm gonna be expecting some kind of expansion next week, next day, but in what direction? In the direction of the weekly RF, and I'm gonna be expecting that expansion higher. And we see on the dollar we have our break of market structure here, confirming the sell setup, confirming the bearish idea on the dollar and the bullish idea on the fiber. So I'm gonna enter here with an option trade entry. Price has dropped to option trade entry during FOMC. That's if if we don't have FOMC, I'm gonna enter here or at this fair value gap. But because we have FOMC, it is better to not enter because we're gonna have a big slippage, and there is a higher chance even if price does drop a little here, just maybe price do something like this, there is a high chance it could take you out here because of that big slippage. So it's better not. Then we see that price has respected this fair value gap to go higher. The next day during Wednesday, this is a good entry for you at London. You see that price has just retraced to option trade entry right here. You enter your setup and stop loss is here, and you have 5R easily, almost 5R. If you exit it at this level here, it's almost 5R above the Sunday opening price. I wanted to see an expansion, a big expansion above it. If price it is indeed bullish, I wanted to see an expansion. If price just keep doing this, then drops lower, taking this low here, that's a confirmation. If price check this low here, the London low of Wednesday, it is gonna be a confirmation for price to target these lows here, these equal lows, and that's what we had. Price has targeted these equal lows, dropping lower, and we see now price during Friday, we see price has break market structure here. I have been expecting something like this during Friday. Once price was here, I've been expecting something like this, continue higher to drop lower, or if price check this high, by then we're gonna be expecting bullishness, like I told you. So that's what happened. If you didn't check your partial here, if you entered here, or if you enter here and you didn't check your partial, see what happened. Price check you out. I did, like I told you, I did. My entry was it was a mistake during the news. We had the news here, this candle here. It was the news H15. It was the news. So I just entered without any. It was an impulse entry. Price was here. I entered like this. Let's stop loss here. This trade for me, it is a I entered respecting my edge. respecting my rules. Only mistake that I made it was during the news release, so I don't have an edge. Even if you entered here respecting your rules, but during that interest rate release of euro, I don't have an edge anymore. So price is just checking me out. This was my mistake. Yeah, I'm still making some silly mistake like that, but right now I have a new rule about this, so I would never take a mistake like this anymore. And it was an impulse, like I said, a psychological mistake. It wasn't a technical mistake for me. Then price has dropped lower. This is what happened during EURUSD. As I showed you here, as I told you, price has failed this high. Then we see a break of market structure below this low here. You see, price has closed below the. It didn't close below, but it closed below the candles. The bodies here, and we see price has retraced to our fair value gap right here. The entry during Monday, stop loss above this high. For me, 122 is here. Check my money. But if you are being targeting the weekly mitigation block, this is your target. Then the next day, like I showed you, we have price check Asian range high at what level? If you at 1 hour order block, if you see here, and if we use 50% with this order block, we're gonna have what? This is the 50%. But just give me a second to show you the 50%. Yeah, it was so close to 50%. Then it dropped over. Right? And you see that Asian range high has been taken, making London to be the high of the day using this range here, or maybe this range here. See that price, it is H premium, taking the buy side liquidity above this high here and this high here, this equal highs. You see right here, and that's 5 minute time frame. Let's find our setup. Let's see, 5 minute time frame. What we see? We see that price here until 3 minute time frame. See that price has break market structure below this low here, this big displacement. Maybe you could enter this order block right here. The stop loss above this high, then price your entry. Maybe you didn't enter here, you didn't like this trade here, gonna have and you waited. You see this market structure shift. We have this fair value gap right now, and you can just enter here, but the fair value gap with the high here, the stop loss there. Then target 1 to 2 below this equal lows, Monday's low, something like that. Then if you target the weekly level, this is your setup. Then once price is here, we're gonna be expecting some kind of bullishness. So if you can do something like this, we see that price has dropped lower, breaking market structure above this high here. What you're gonna do, you could enter here, but it was outside kill zone. It was outside London close, but it was at the PM session. If you are using AM session, PM session, this entry was a PM session. I don't trade during PM session for Forex market, so I'm not going to enter here, but you can see that price break market structure above this high here, at first above this high, then this high, which is a confirmation at least to buy here with stop loss here and target what? Target the premium range of this high. Target maybe the optimal trade entry. Target this fair value gaps right here that you see. Let me give you something. How to refine that entry. Yes, maybe you can miss moves doing that, but this is what I do. At least if I have this fair value gap here, at least I'm gonna enter at equilibrium of that range. We have a fair value gap here, but let's assume I don't have a fair value gap and I have a fair value gap during option trade entry. I'm gonna wait for that fair value gap to refine my entries to have a good risk reward. And like we see, and if you see that price has given you your target here, then maybe like I told you, if we didn't have that break of market structure on the dollar lower, maybe price could just do something like this. That's why you should check partial at this fair value gap if you entered here, or maybe if you waited for a good entry or for a confirmation and price took this high like I showed you. You enter here at this fair value gap, and but it was during FOMC, but you see that FOMC has respected the structure also. Or maybe you didn't enter here, you waited, you have this as your entry, as price, as retrace to this order block, and we have Fibonacci level here. Could just enter here, something like that. Stop loss here. Do you see? Like I showed you, 5R easy, or almost 5R. Or maybe you waited for a confirmation and you see that price has closed above this candle's high. We have a fair value gap right here. Could enter here, right? That's stop loss for me. I'm not gonna push my stop loss here. I'm not saying okay, let's push our stop loss here. I wanna have a stop loss in a logical area, in a place that is gonna invalidate this setup here, as gonna invalidate the bullish idea. It's not only gonna invalidate the trade, but it's gonna invalidate the bullish idea. And I see if price check this low here, then we're gonna see bearish prices. Until then, if price check this low here, then an entry, it's not gonna be a confirmation that price gonna drop lower. It maybe something price could do easily could price do something like this, then break market structure should go higher, right? And we're still inside this range from this low to this high. But if price check this low, for me it's gonna be a confirmation that price has shifted lower. So it's better to put my stop loss below this low than this low here. Yeah, this is the Euro USD. So for fiber, what we see that price this week here has been a contraction week. Price has been consolidation during this week because price has been already in discount of this range here. Price has already dropped to discount to this weekly order book. Then price has waited for the dollar. If we see on the daily time frame, we see that price has waited here. Friday, Monday has made the low of the day of the week. Uh, as expected, I've been expecting price to continue higher, but if we didn't have this idea here, I've been expecting Monday to be the low of the week, but you see that for the dollar, price has made the low of the week, has made the high of the week during Tuesday, and euro has made the high of the week during Tuesday. So for GU has been waiting, the dollar to trace to premium for GU to go higher, and that was a confirmation also because we were seeing some strength in GU to confirm that price it wants to be bullish from here, and we see that price like I showed you. We see, let's see, have this is the daily CB that price has reversed from it, wasn't expected, but as price check this low here, which is a confirmation that it is gonna check this lows here. At first, as price it checked this low here, I've been expecting maybe price find some you know some support do at this fair value gap here, at this 4 hour fair value gap, but as you see price it didn't do that. We didn't have any confirmation that it is gonna reverse from this fair value gap higher. Just price has just went through it, drop a lower, taking the sell side liquidity below Monday's low, and making Tuesday the high of the week and also the low of the week. On 1 hour time frame, what do we see? We see that price Monday price has dropped lower, and we have an SMT between Monday and Tuesday between GU and the dollar, breaking market structure here above this high here. You see price has break market structure here, and we have this fair value gap here. You can enter here, you can find your entry here with stop loss below this low, and we have this SMT. This SMT has confirmed, if you see, Monday high has been taken right here, but price didn't check for GU on this low, so it is a confirmation to be bullish, and you see that price just went higher. So your entry was somewhere here, let's say. Next day, what we have price is going higher, respecting this structure here. For me, I was bullish, right? But I wanted to see this low to be taken. So if price take this low, it's gonna be a confirmation maybe for price to chase to this fair value gap or to this fair value gap before going higher, something like that. Then price has respected this order block, then it went higher. So I used this low here. I wanted to see this low to be broken if I want to be bullish from this fair value gaps. Or I'm gonna be bullish using this range here. And you see that price has dropped to this order block here. This one has dropped to this order block, this 1 hour order block, then it went higher during FOMC here. And we see also price has respected this fair value gap right here. Check your partial here, and as I told you, even if price is here, you don't shift your bias until you see this low is broken. So once price retrace here, I'm gonna look for another buy entry from this fair value gap, stop loss here. I would have been entered at this place here if it wasn't FOMC, but because FOMC, it's not an entry for me. So this is the second entry I could enter for GU and target this high here. Then the 50% of this fair value gap. and you see if we use our Fibonacci level to highlight the 50%, could say the 50% was here to the pip, right? Then once price took this low here, it's a confirmation that price has shifted lower to check this low, this low, this low, then to fill the 4-hour fair value gap like I showed you. Where is it? This 4-hour fair value gap price here to find some support here within this range. Once price took that low within this range here, from this low to this high, or from this low to this high, as optimal trade entry to continue higher, but we see at 15 minutes or 5-minute time frame we didn't have any confirmation, just price kept dropping lower. Right here, this entry, if you waited for a confirmation because of SMG, we see that price took this low, have this fair value gap, this small one. See, this for me a good entry here with stop loss here. This time I'm gonna be putting my stop loss here because I am confident of this SMG. We see an SMG, we see that this low is not taken, and where price has confirmed is this SMG, but taking this low here. By taking this high here, we see this break of market structure, and we see that price has retraced to the fair value gap. It is clear on 5-minute time frame. See, break of market structure, price retraced to this fair value gap right here. Entry there. Good entry here, targeting London's high, but price, if you keep checking partial all the way, price would have give you 6R here. Then at this point, you see that price, maybe you entered here at optimal trade entry at this 1-hour BC, because this was 1-hour BC. Right? Or if you waited for a confirmation, you see that price break market structure, check these lows here, then break market structure above this high. Maybe you have been waiting for this fair value gap to be filled. You miss your trade. You miss the trade. That's fine, because for me, I would have entered at either at this breaker here with this fair value gap, or at this fair value gap right here. Could enter here at this breaker here. This is a good entry for me with the fair value gap as to overlaps level with stop loss below this low, target 1 to 2. Yeah, this gonna be my target 1 to 2, something like this. Good entry there, but as you see, price didn't fill me in. If I entered here, but for me, there's a high chance if I entered, I could just enter at this optimal trade entry from this low to this high, and just put an entry taking these lows here. There is a higher chance for me to enter like this. Right. So either you enter here, you have your 3R, or you miss your entry. And that's fine. You're gonna miss entries. I'm not saying it's something bad that you need to change your how to trade. I'm not saying okay, you miss your entry, you should change how to trade. Okay, let's next time let's use uh, this price balance range and enter, or maybe next time let's use this price balance range here and enter, like this. You are changing too much, then price would, and you would maybe price next time gonna give you your entry here like this. You entered so early like this because you are using this price balance range. You put your stop loss here. You have been targeting, let's assume you have been targeting 122. 122 is here, right? But your original setup, how do you enter? How you have been backtesting a lot, you always enter at this fair value gap with option weighted entry. If you use option weighted entry, you say, okay, I have this fair value gap at discount range. I would enter here. This is what I have been practicing a lot, and you see that 122 was here. So this trade, if you enter here, would take your money above this high, but if you enter at this so early, you're gonna be waiting for your target, then price doesn't fill you in, then reverse, because you have entered so early. You didn't enter your edge, you are trying to change it so much. Just stick to your edge, just stick to your one model. You want to enter at this fair value gap? Okay, wait for it. Don't say, okay, price is here and it was so close, so let's just enter. That's jumping the gun. You are not entering your edge at all. That's my reasoning for it. So thank you. We get to the end, and thank you so much for sticking to the end of this video. Let's talk at the next video while reviewing also the cut GPY and gold. See ya and goodbye. Have a good day.